Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Okay, let's try to create the trading plan for the coming week on the euro currency. As you can see, this will be not an easy task since market is driven by the Cyprus turmoil and the most possible behavior of the price action on the euro currency will depend on the solution and announcements that will be made on Cyprus situation in the beginning of the week. Well, I will not repeat all the stuff that I have written on research that I have posted on the forum, because it's rather a lot of text to speech here since this is the daily video research, and if you would like, you will probably read this by yourself, and we will focus purely on the technical picture on the current situation, and in fact it hasn't changed much from the previous week. What we see, almost within the whole previous week, market has formed side by side the stop grabbers that are bullish sign on the daily time frame. So we see this stop grabber, and here and here, and finally on Friday, and all stop grabbers are still valid. So that low has been taken out, this low has been taken out, this and this one, and theoretically this suggests the taking out of these highs at minimum. That is the minor target of the stop grabbers, and but before market will reach this area, market will meet with the two significant resistances. First one is the gap that hasn't been filled yet on the euro currency. The intraday charts will see it, and finally the second resistance stands right here, is around 3060 area. On the daily time frame it looks like the simple and minor fib resistance level. But if you will take a look at the weekly time frame and read the research of the weekly time frame, you'll see that that is the weekly confluence resistance that market has broken, and also that is the long-term natural support resistance area that market probably will meet. Will we take the long position currently or not? That is very significant question, because technically it's very difficult to justify and find a reason to take long position right now, if of course you do not have it already, the long position based on the stop grabbers that we have discussed on the previous week. And if you had taken the risk and now have the long position, probably it's not this will not turn bad to you. But you should understand that if you even have the stop order at the break even, this will not help you much if market will open with a gap to the downside. You will take the loss anyway. But if market will show the move to the upside, probably you stand now on the right way, because technically you have the reason to take the long position, because we have the stop grabbers, and as we will see on the lower time frames, there are some other significant moments. But first I would like to return the topic whether it makes sense to take long from the current levels. Let's take a look at the 4-hour time frame. On the 4-hour time frame, in fact, we have the same picture as we had on the previous week, except maybe this gap and this new low, but still this low stands in a row with this overall price action to the downside. Although we have the same divergence, we have the bullish trend now, but on the previous week and within the previous daily researches, we said that to justify the entering on the long side of the market, we need to see the breaking of this tendency. So we need to see the high that is greater than the previous one, and the previous one stands right here. But take a look what market will have to do. It will have to close the gap first to take out of these highs, and finally move above this high. But take a look that this high stands very close to the minimum target of the stop grabbers, that is around 130, 133. Okay, and if you will have to enter long, or better to say will have the reason to enter long only above this high, what is your what is your profit that will be guaranteed by the market? Only this small move to the upside. But where you will place your stop? That's why, as you can see, it's not obvious that it makes sense to enter on the long side of the market. If you will take the position right here, then you will meet other problems that we will discuss on the hourly time frame. And the most problem is 130.60 area. That is, as I said, will be the significant resistance. And also that will be the target of the intraday pattern that market now has formed. So from the conservative tactics, I think that it's better will be either to wait the pullback to the upside, to skip this move to the upside and wait the possibility to enter on the short side of the market, whether it will happen from the resistance on daily time frame or whether it will happen with the breakout of this low. That it will be just safer, because market now stands in the long-term bear trend. The overall environment for the euro currency is bearish, despite that market could show the positive reaction on some, for instance, providing the bailout from the euro union to Cyprus. Anyway, this bailout will hardly could be treated as the positive sign for the euro in the long-term perspective. It could just trigger some positive emotion right at the moment of the announcement that could lead to some splash to the upside. But in the medium term, when the emotions will calm down, this could lead to the continuation of the bearish trend. From that perspective, the conservative tactic and most safer tactic will be just wait the possibility to enter on the short side of the market. But if you already have the long position, or you still would like to take the risk and would like to enter long here, let's take a look at the hourly time frame. On the hourly time frame, in fact, although I have announced the suspicions about the reverse head and shoulders patterns on the hourly time frame, especially on the euro currency, that in most cases usually fails, but here you can see it start to work. And that is our reverse head and shoulders. Probably you have entered with the stamp grabbers right in this area. Probably you are. So if this is the case, or if you just think about entering long, let's take a look first where the ultimate target of this pattern. The ultimate target of this pattern is right here. It's 130.60, 130.80 area. Despite how you will calculate it, whether you will take the classical approach as I draw on this chart, the distance between the head to the neckline counted to the upside, whether it will be a 1618 extension from that ABCD, A, B, C bottom, D 1618 also stands in this area, whether you will treat it as the butterfly. So you can see left wing, that could be right wing, although I do not use the butterflies cell on the bottoms, but somewhere of you do this, and this is not the mistake, this is just the specific of your trading style. That's a bit personal, but if you will even take this as butterfly and measure the 1618 extension, you will get the same area. And what the area is 130.80. You see that this is the upper body of the gap. That is also the weekly pivot resistance one. That is also the 130.60 area of solid resistance that on the weekly time frame. So market could show a motion splash to close the gap, and here is where it stands the ultimate target of this pattern, and you would like to enter long in this area. This carries a lot of risk, because even with the move to the 130.80, market will not break this tendency. It needs to move above the 131 to show it. And one of the possible scenarios is that market probably could continue move higher, but there are also odds that market will reverse in this area, just close the gap and turn to the downside. That is possible. You can see this overall situation carries a lot of risk, and as I said, if even you have already the stop at break-even point, it's a big question where market will open on Monday. That's the first question. The second moment is, I do not want to dedicate it a lot of time, but take a look at the weekly Euro GPI chart. We have the confirmed also two contradictive solid patterns here. We have confirmed double repo sell on the Euro GPI on the weekly time frame, and simultaneously we have the bullish stop grabber here. I have wrote a bit about this situation in the weekly research, so you could read the details there. But I just would like to make the note about this prayer, about the relation euro to Japanese yen, and that is very significant and interesting. On the weekly time frame, you will find these patterns there. Just you could just take a look at it. If you trade this pair, this could be interesting. Well, in fact, that's all that I would like to discuss with you. The major idea of this research is to be that you should be careful with this, with any long position currently on the euro currency, and the safest way to deal with the euro currency is to search the possibility for the short entry.